Welcome to another episode of the Property Nomads Podcast. We're back with Marc Champ of Wharf Financial again, and a few articles to go over, a couple of things that caught my eye from the ever-reliable BBC. But before we dive into that, Marc, you mentioned a little while ago that you've been doing a charity bike ride in Portugal. How did that go? How was that?
It was tough. And thanks for mentioning it, because we raised some funds for child aid for the kids in Ukraine. So we managed to raise about 24,000 in the end, which was a great number. But I tell you what, we did go through it. And I know it's nothing compared to what they go through in Ukraine, but there were some big mountains. On our bike computers, it got up to 45 degrees. There was 500 miles of riding in 5 days. And yeah, we were broken. It was horrendous. And I think the worst moment came, it was actually on day one. I was going up a mountain. It's about halfway up. And I saw two of the other guys. They'd stopped. And I got off my bike and I got cramp in my hamstring. And I was in bits. I couldn't walk. But there was a guy called Roy who came running out of the bar that my friends had stopped at with a can of 7-Up. And he said, "You're doing such a good job for, these people, raising these monies for charity. Here's 20 euros to go and get a drink for all you guys on the rest of your tour." So it was just like the little things like that kept us going. And this guy didn't know us, local Portuguese guy called Roy, and he just kept us going. And so all the support we received was great. Raised some really good funds, and just looking forward to next year now.
Good times. I'm glad it was good, and that's quite a nice figure to raise. So congratulations on that.
Thank you.
Moving on, and again, not to date stamp things, of course. Both smiling like Cheshire cats. England's women done a great job the other day as well, and of course Liverpool won the Community Shield. So hey ho, it's only the start of August, but the sporting world is very successful. Happy days. Right, moving on. Just a couple of articles that I saw. One that I was going to pick your brains about, Marc. This came out the other day. A mortgage affordability test has been scrapped by the Bank of England. Now, I quite like the idea of this because it relaxes things a little bit. But from a lending point of view, and from, of course, you're a broker, what's the reaction been from either your customers or the lenders themselves?
I would say from the customer's perspective, there hasn't been too much of a reaction, because a lot of what we see is HMO lending and lending in the north of England, where the stress tests haven't made too much of a difference anyway. So I'm talking about the unregulated market. We don't work in the regulated market, but we don't see too much difference, because the yields on HMOs and the properties in the Midlands and the North, they usually meet the stress tests easily anyway, so you can get maximum loan to value. In my area, the PRA brought in the stress tests at around 5%, and 125% for limited companies, and 140% for personal, for individuals borrowing. And it hasn't really affected that too much. We've not seen any customers benefit from it or had any issues, because I think the lenders were lending responsibly anyway. It's not like back in 2008 where people were getting these ridiculous mortgages, self-certifying them, and money just flowing out the door for no good reason. There has been caution, and the high street lenders especially have been overly cautious, in my opinion. So it hasn't made too much difference. The restriction lifting, I suppose, frees things up for first-time buyers, which is a good thing when we're talking about on the regulated side. And there something had to give to allow it to be more affordable. But then you have to also think with regards to wages and inflation. With inflation going up so much and wages staying where they are, the affordability it's gonna be difficult anyway. So they needed to release a bit of the tension. So I don't think it's so much of a bad thing. I think it's going to create opportunities for people, like everything does when there's a change. So I think, yeah, not a bad thing, but something to always be careful, not borrow too much. Even if there aren't regulations in place, you need to know your own finances. Don't borrow too much. Don't overcommit, and invest sensibly.
Very prudent advice, as always, Mark, and I'd second all of that. You mentioned there about house prices, and again, I'm going to go back to our favourite place, the BBC, because it's an article that made me laugh. And the headline is, house prices defy expectations to hit record. Basically, in a nutshell, in June, the average house price in the UK reached 294,845. And the reason I flagged this particular article up is I like the headline, defy expectations, when you've managed to devalue your currency substantially and create inflation on the back of that. Asset prices generally are going to go up. So it made me laugh that I don't know what expectations the BBC are coming up with, but they can't be quite high. Nonetheless, that just made me laugh. You don't really have to comment on that. It made me laugh. All of that being said, just go back to mortgage affordability on that. Yes, my first reaction there was actually that is quite a positive thing, and I have no negative news on that. But the only articles that I found that I thought would be interesting my end, what's been going, or if anything, what's been going on your end that you feel listeners need to know about at the moment?
Well, I think the base rate's been creeping up, and we're expecting another rise in the start of August. It's making it more difficult for people, but it does create opportunities. So we're seeing the increase in rates filter through to some of the bridging lenders and the development lenders now. So their rates are increasing slightly. It's a time where you have to think, is the profitability actually in the deal? Because with the rates going up and inflation going up, i.e. costs of materials, all that sort of thing increasing, puts a strain on the bottom line. Is there going to be a profit in the deal? So it's something that you really need to look at when you're looking at any type of project, whether it be a refurbishment or a development. If you don't know how much profit you're going to make, don't do it. If you have only a skinny profit, I would say think about it very carefully, because the price of things is going to continue to go up. There's going to be fuel problems are going to increase, I presume, as the war in Ukraine continues, and rates are going to creep up, as we've seen. Shawbrook today have just sent something through that suggests that they may increase their rates. We've seen it from a lot of other lenders, and it has to happen. There's plenty of liquidity in the market, but rates are going to go up, and it's going to make that squeeze on the profit seem ever more real. So making sure you price a contingency into any of your property development or refurbishment, and making sure that there's enough profit in there to make it worthwhile, because there's no point doing anything if you're not going to make a profit. So that's the thing that I would really highlight that we've seen. And we're seeing offers reduce. So people are going in with an offer on a property, and the vendor saying, I'm not taking that offer, it's too light, whatever it may be. But then a little bit down the line, they're coming back and saying, do you know what, actually, I will take that offer, because there isn't as much lending out there from there's not enough profit in a deal to offer highly on any particular project. So we're seeing some bargains being picked up. We're seeing people being able to knock down the offer prices, and it's making the market more competitive, but in a slightly different way. It's not competitive like falling over yourself to get higher than the asking price. It's who's going to get as close to the asking price without going over it. So it's just slightly altered, I would say.
Yeah, that's interesting. So increased competitiveness, but not necessarily cooling off, because to me, in my mind, they're two different things. Cooling off is that there are no offers coming in, everyone's sitting on their hands, whereas you're saying everything's still very competitive out there, which is true. It's just people aren't offering as much because of the way that everything else is going.
Exactly that. You have supply and demand. The supply of deals is there, and it probably increase the supply as people find times harder, and there'll be people that aren't going to be able to afford to keep their properties and things like that. So the supply is going to continue to go up. The demand is still there because some people have sat on their money, and there is a liquidity, but that demand with an increased supply will bring the price of properties, well, maybe not all properties, but price of development projects down slightly. But there is still demand. So it's a little bit of a strange one with the supply and demand correlation, but I can still see a lot of activity going on.
Yeah, perfect. And for people that I speak to, I think a recurring theme of this podcast is whenever you and I get together, or we're reacting to various news articles out there, or changes to taxes, legislation, all that sort of thing, it always come back to the same principle: is it creates opportunities. Exactly what you said. I've said it a bunch of times, you said it a bunch of times, that even if what we're not trying to do, we're not trying to put a doom and gloom spin on everything. That's not what we're here for. We've got to be realistic, yet at the same time add that dose of realism, maybe the odd bit of pessimism, but ultimately, if your mindset is where's my opportunity in this, you will find opportunity, because it's always out there.
Yeah, definitely. There's opportunities in every market, and usually a downturn in the market creates more opportunities than an uptick. So there's deals out there to be had. People should be looking out for them. The other thing we've seen a lot of is refinancing. The people who were on a fixed rate and it's coming to the end, or people on a variable rate, they are looking to fix in now. It's become real that rates are rising pretty quickly, and they want to fix in. So nobody's coming to us and saying, do you know what, can we have a variable rate? Just bear with me 1 second. Hold on 1 second.
Yeah.
Sorry, we had an intruder looking for colouring pencils, but the intruder has gone. She's gone back to Princess Land, I think. So
we'll keep that in the episode. By the way, I always love stuff like that popping in.
Keep it in. Yeah, I should have got her on camera as well, but she's got food all around her face after she's just had lunch. So, but what was I saying about? I can't remember what I was saying. Let me think.
Oh, I should
what
be
was
paying
it?
more attention.
It was. Let's think what I was saying.
Rates and variables. People wanting to fix more rather than
people wanting to fix refinances. That's it. So people are looking to refinance and move on to a fixed rate. We did have one customer the other day who came to us and they said, we are on a fixed rate. Well, no, sorry, we're on a variable rate with a lender, but there are early repayment charges. And we want to move to a new lender. And can you help us? And I said, yeah, but you need to pay this early repayment charge. Oh, well, we don't want to do it then. And lenders, if you're in any type of rate that has a penalty for leaving, you need to make sure you're aware of that, because to think that the lenders are just going to go, do you know what? Yeah, the market has turned, we'll let you off. It's not going to happen. You know, their early repayment charges are in there to protect the lender from movements. That's why they put them in there in the first place. So it's something that early repayment charges and getting in the right position for yourself is really important. And refinancing at this time may be a good thing, may be a bad thing, because, you know, something could happen down the line that's going to bring interest rates back down. And if you fixed in at a higher rate of, say, you know, like 5% or whatever, and it's going to drop down to the lows where we were at 3%, that's something that you need to assess.
Mm-hmm.
But one thing I always say is you need to think of property as a long-term investment. Mm-hmm. So it's going to go up, it's going to go down. It's the same with any investment. You're going to have peaks and troughs, but you need to ride it out and plan for the long term. Guessing the market is very difficult to do, and flipping is rewarding, but it's also the thing that probably breaks the most people as well. So there's a risk reward element to everything, and make sure you get it right.
Yes, hope is not an investment strategy.
No, not in all circumstances.
No, yes, totally agree there. Mark, I think that's absolutely perfect. So just to recap, so we have looked at the fact that the mortgage I'll get my words out today. The mortgage affordability test has been scrapped by the Bank of England, which again we concur is a good thing to an extent. House prices have defied expectations to hit record highs, but that's really no surprise there. Bank of England, probably by the time this episode goes out, more than likely would have increased the base rate, but again, who knows until it actually happens. And as usual, that's going to create opportunity. And then from an insider's point of view, more people are starting now to fix because of everything else that's going on. To me, that sounds like a great recap. We know where we are. We're going to try not to beat the drum for the rest of the year, especially when it comes down to inflation, prices, etc. Because these are things we said back in December 2021 and January 2022. So we'll try not to beat the drum for the next few months.
And just while we're talking about economic updates, we produce a weekly economic update. So if the people who are listening in want a copy of that each week, all they need to do is email us at info@wharffinancial.co.uk, and we can send that over to them. It's free of charge, comes out every Thursday, and just says what's going on. It tells you new products from some lenders. It tells you about the property market. It tells you about the economy as a whole. So all you need to do is email us, and we'll send it out free of charge.
Yeah, I highly recommend that people do that. I'm on the mailing list, and it's a very good read every Thursday. So I'll hold my hands up to that and recommend that people do that. As always, we will put that email address in the show notes. Mark, superb. Thank you for your time. Look forward to sort of catching up at the end of August, start of September, and have a good summer holidays.
Thank you very much.